Okay, I shall just start. So sorry for those who have been waiting for the past 10 minutes. I have some technical errors. All right, so today we are going to be handling on the sale of NCA as well as some financial statements. Okay, so I will be going through some basics of sale of NCA, and then I will run through 2 questions. Then after that, we will run through another financial statement. So for sale of NCA is actually pretty straightforward. Sale of NCA is actually pretty straightforward. So whenever you are selling something, so when you're selling something, when you sell something, what would you receive? You'll receive money, right? So for sale of NCA, there is 4 steps. So the first step is you will receive money. Okay, so you receive money, what should you do? Debit cash at bank, because you receive money, right? So after you receive money, what are you selling here? You are selling a non-current asset. A non-current asset. So when you sell the non-current asset is no longer inside your business. Therefore, you credit the NCA. Okay, so you will get rid of the NCA. Okay, so you will credit the NCA, whatever the NCA is, be it equipment or machinery or whatever. So we also learned that with an NCA, along with it, it comes with an acute D, right? So when you have an NCA, every year you will depreciate. So every year you depreciate at the year that when you sell, you will have an accumulated depreciation. So the accumulated depreciation, you also have to get rid of it. So when you get rid of the acute D is a contra asset. To remove the contra asset, you need to debit it. So you will debit acute depreciation. Okay, then lastly, you will determine what is the gain or the loss. So if it's a gain, means you are making money. It's an income, so you credit it. If it's a loss, means you are losing money, so it will be an DR. So normally when you make money, you will be credit. Lose money, you will be DR. Okay, so for the last step, it will just be a balancing figure in your journal entries. Okay, so with that said, let's look at this. So I'm just gonna pause here for 30 seconds reading time. Okay, so for here, sold one equipment costing 35K, acute D of 21,700, and they say that the buyer paid 20K. So the 20K is whatever you receive from the sale. So for this question is actually quite straightforward because everything is already given. It's already given to you. It's already given to you. So like what I went through just now, the first step, it will be cash at bank. So when I sell, I will receive 20K. So this one, it will be debit cash at bank, right? Because I receive it, cash at bank increase, I'll debit cash at bank. Then I sell equipment. This equipment is no longer in my business. So I need to remove it, right? I need to minus it. So credit equipment. Okay, so this one asset decrease. Then my acute D also I have to get rid of it, right? So acute D to minus your acute D, you need to debit acute D because acute D is a contra A. Then the remaining one, it will be the balancing figure, which is this one here. Okay, so how to balance? We know that your DRCR must be the same, right? It must be equal to each other. So if you look at the journal entry, you can see that your debit side here, you have 41,700. Whereas your credit side only have 35,000. So how to make it balance? I need to credit another 6,700 to make it balance. So like what I went through just now, since this is sitting at the CR side, means that this is a gain. Okay, so credit is a gain, means that it's an income. Okay, so let's look at the financial statement. So how will you present? So for here, like what we said, your sale of NCA, when you make money, when you gain, it's a gain, it's an income. So you will show it under your other income in your statement of financial performance. So a quick recap again, statement of financial performance, it will be your income minus expense equals to profit. This is what you are showing. Okay, so all the items in your performance statement are all income and expenses. Okay. So I'm just going to pause here for maybe 30 seconds for you guys to digest. Okay, so let's look at the other scenario. So the figures are also still given to you. All you need to do is to find the gain and the loss. Okay, so for here, same thing. Okay, costing 35K, acute D is 21,700, and we received 12K this time. So same thing. I receive 12K. When I sell, I receive money. So here it will be debit already, right? Debit cash at bank 12K, right? Then sell the equipment. Equipment is gone. So credit equipment, which is 35K. Then third step, I need to remove the acute D. So DR the acute D. Okay, so debit the acute D. And then after I do all of this, I will do the balancing figure to find the gain or the loss. So in this case, after I do, I will realize that over here, my debit side, I will have 33,000. Is it 33,000? Okay, anyway, my mental sum is not so good. So after you do this, you will realize that your credit side is actually bigger than your DR side. So to make this thing balance, you need to debit another 1,300. Okay, so same thing. If it's at the DR side, means we are making a loss, means it's an expense. Okay, so since it's an expense, I will show it under other expenses in my statement of financial performance. Okay, so another way to actually calculate your gain or loss, to make it simple, it will actually be the cash received. Your cash received minus the NBV of the equipment at the point of sale. So if you get a positive amount, means that you are actually selling at a higher price of your NBV, so it will be a gain. But if you get a negative, means the cash you receive is actually lower than your NBV amount, then it will be a loss. So same thing, gain is an income, loss is an expense. Okay, the idea is still the same. So you will still do the same three steps. Okay, the money received, remove the NCA, and then remove the acute D. Okay, so you realize that no matter how you do, it's always the same three step. So your NBV is your cost minus acute D. Okay, so once you know how to determine the gain and the loss, to do the question is actually quite straightforward. It's quite easy. You just need a little bit of practice. Okay, so let's look at this question. Same thing, I'm going to pause here for maybe 30 seconds to read through, then I will come back again. Okay, so for here, the first thing to determine is actually the year end. Okay, so for here, our year end is actually very straightforward because it's December year end. So it makes your calculation easier to calculate, right? Okay, and then we also know that for this question, there's actually three things going on. So there's existing machinery, then we sold one, and then we buy one. So in totality, there is three things going on. And if you were to attend my classes from before on how to calculate depreciation, you will know that I actually use a table to depreciate. Okay, so I'm gonna use the same method for this question as well. I will use a table to help me do my depreciation. Okay, so as for here, first gen, I have these figures, right? Okay, so these are my existing equipment. And I know that this date sold one machinery costing 10K. Okay, and the machinery that I sold, it was bought on 6 May 2017, and we received 7,000 from this sale. So this one, I will say this is my first one, my first asset, right? And then they say that after that, on 1st March 2021, okay, we buy a new machinery, $9,000. Okay, so this one will be my second machinery. Okay, then the third one will obviously be the existing one that I have here. Okay, that is been sitting in my business before I sell and then before I buy also. Okay, so in totality, there is three assets that I need to take note of. Means that I will also have to craft out three tables. Okay, so here our depreciation policy 20% using reducing balance method, full year depreciation charge in the year of purchase, none in the year of sale. So this sentence, if it comes out, you should be happy because we don't have to prorate. Okay, so it means that on the year that we buy, regardless of how many months that we use, we will still depreciate one full year, right? So let's say my year end here is December, right? And then I only bought it in October. So means I only use for 3 months. Okay, so although I only use for 3 months, I will still count the whole full year depreciation. So if this sentence were to not appear here, okay, then I will need to prorate. Means that if I buy on October, year end December, I will need to take the depreciation multiply by 3/12. Okay, I need to prorate. Okay, so the same goes for sale lah. So sale will be the opposite. So on the year that I sell, my depreciation is 0. I don't count any depreciation. Okay, although I already use a few months on the year that I sell, but I just don't count the depreciation. That's what it means. Okay, so it just makes your life easier. Okay, so for here, calculate the depreciation. I will go through how to craft the tables, and then we will get to there. Okay, so if you still don't know how to craft the table for depreciation, which is actually very easy, you can look back at my previous classes, my previous lessons on how to craft your depreciation table. Okay, in my opinion, I think that makes life easier lah. Okay, but up to you if you prefer to do a manual calculation. Okay, so let's start with the one that we sell first. So normally, I usually tell students to do the one that sell first. Okay, because we need to find the acute D at the point that we sell. Okay, so the one that we sold, which is this one, the 10K. Okay, so the one that we sold, it was bought on May 2017. So what is the first year end of this machinery? The first year end. Okay, so my year end here is December, right? So what is the first year end? You can like unmute and then talk to me also can, or type in the chat. Okay, so for here, first year end, it will be December 2017, right? Okay, December 2017. So for here, can you see that my first year, I will start like that. Okay, cost 10,000. My depreciation, I'm using 20%. So since this is the first year I'm depreciating, there's no acute D, no MBV. So how to find depreciation? I will just take 20% multiply by the cost. Okay. And then again, the logic is that it's the first year, acute D is empty. So my acute D is also equals to my depreciation. Hence my acute D is also 2K. Then last column, MBV. So how to find MBV? Cost minus acute D. Okay, so it will be my 10K minus 2,000. That give me 8,000. So I will keep repeating this until the year that I sell. So I know that when I sell, I sold it on August 2020. Okay, but because of this sentence, I say that the year that I sell, I don't count depreciation, right? So I will stop at the previous year end, which is December 2019. Okay, so I will depreciate all the way until December 2019. Okay, and the figure that I want to get is this one. Okay, 4,880. So this is for the one that I sold. This is the sold. And then moving on, let's do the one that we buy, the second one. Okay, the one that we buy. So the buy one is also kind of straightforward, right? Okay, so far it's still straightforward. So the one that I bought is 9,000, and then I bought it on 1st March 2021. So what is the first year end of this machinery? December 2021, right? The first year end. So I will start with December 2021. So the same thing, I will do the depreciation using this table. Okay, and then I will start at 2022. Why I start at 2022? Because my question, I only interested in depreciation for 2021 and 2022. So you have to read the question and understand what they are asking for. So don't go and calculate and give answer that they didn't ask for. Okay, so for here, they're asking for 2022. So I will just stop at 2022 lah. Okay, so this one will be the new one, the new machinery. So I think it's straightforward. As of how to calculate this, should be nothing new. Okay, then lastly, this one will be a little bit complicated, but actually if you keep practicing more, it is actually quite simple. So the last one is the existing equipment, okay, which is the one over here. So this one is for, these figures are for this date, right? 1st Jan 2020. 1st Jan 2020. So if you were to look at the dates, right, these figures are 1st Jan 2020. The one that we sold, right, we only sold in August 17. So do you agree that the one that we sold here, it is still sitting inside the figures here? Am I right? Because if I were to draw a timeline, this one is 1st Jan 2020, right? But we only sold on 17 August 2020. So here I have 55K machinery, but here then I sold off my 10K. So this means that the 10K that I sold here, it is still sitting inside part of this 55,000, right? Okay, so but now, like I said, the 10K is already sold. So what I need to do is I need to minus it out. Can? So this is the part that students normally find it very confusing. Okay, but if you can see the logic, it will be actually very easy. Yeah. Okay, so for here, again, I sold on 17 August. This is August that I sold. But the figures here is showing me for Jan. It's showing me for Jan. So as of Jan, the 10K that I sold, it is still sitting inside here. Therefore, I need to minus it out. Okay, so to find my existing one, I will take 55,000 minus 10K. Okay, that's why here it is a 45. Okay, then as of Y, it is December 2019 because these figures are for Jan 2020. So last year ending equals to this year beginning. Last year ending is this year beginning. So this year I started with this, means last year ending, I also ended with this lah. Right? So last year ending is when? Isn't it just one day before this? The day before, right? So 31st December 2019. Hence I have this. Okay. Then as of the acute D, how do I get this figure acute Ds? So acute D, same, the logic is the same. Except 1st Jan 2020, my acute D is this 17,800. And I know that at this point, I haven't yet sold the equipment. So the whatever equipment that I sold, do you agree that the acute D is also sitting inside here? So same thing, I need to deduct it out. So I will take the acute D from here that I calculated. So at the point that I sell, the acute D for the one that I sold is 4880. So I need to deduct it out also. Okay, so it will be to get this, it will be 17,800 minus 4880. This is how you get the acute D for existing equipment. Yep. Okay, then the rest, after you can get this step correct, you manage to get this 45,000 and this 12920, the following will be the same. So you will just keep on depreciating all the way until December 2020. Can? Okay, so same thing. I'm going to pause here for a little bit and let you look through the table and digest. Okay, so with this table, I can actually answer the question already, right? Of what's the depreciation of 2021 and 2022. Okay, so the idea is the same. For 2021, I'll look at all the 2021. I'm interested in depreciation, so I'll look at the depreciation column. So I will just take 1,800 plus 5,133. Okay, and that is how I will get this 6,933. And then for 2022, same thing lah. So all the 2022 depreciation, I will add together. So 1440 here plus 4106, and then I will get my 5546. So this is how you do it. Okay, and then the next part, they actually ask for the journal entry for the sale. So same thing, the sale, I will always follow that 4 steps, right? When I sell. So it's whatever that I was going through just now. Give me one sec. Okay, so when I sell, let's recap again. I will receive cash. Okay, so when I receive cash, I will debit cash at bank. First step, right? Then second one, what am I selling? I'm selling the NCA, right? Which in this case, I'm selling the machinery. So I will need to remove the NCA. So here I will credit the machinery. And I know that along with my NCA, I also have acute D, right? So I also have to get rid of the acute D of the one that I sell. Okay, so to remove acute D, I will need to DR the acute D. Then lastly, after I've done with these 3, I will determine what is the gain or the loss. Okay, so for here, to do the journal, I think I can just do it here first. Okay, so for here, first step, debit cash at bank. So the one that I sold, I actually received 7,200. So you can see that over here, I debit cash at bank 7,200. Second step, I need to remove the NCA, right? So credit my machinery 10,000. Okay, then third one, the machinery comes along with the acute D, so I need to remove the acute D. So how to get the acute D? It is whatever we calculated in our table above. Okay, so at the moment when I sell, my acute D total, it was 4880. Okay, that's why over here, I will debit the acute D 4880. And then now, lastly, I will do the balancing. Okay, I'll do the balancing. I know that my DR side is bigger than my CR side. So to balance this, I will need to credit another 2080. So when I credit, this is a gain because it is sitting at the income side. Okay? So actually, if you keep doing and practicing, you'll realize that this is actually quite easy. It's nothing too complicated as it seems to be. Yeah. Okay, then the second part I asked for what is the journal for depreciation, which I think should be very easy and you should know by now, right? So debit, depreciation, credit, acute D. Okay, the number is whatever you calculated from your part 1. So I think this is kind of straightforward. Right, okay, and then performance, same thing. Performance, I want to show my income and my expenses. So I know that I have my expense, which is the depreciation, of course, and I know that I have a sale of NCA, which is a gain, so I'll put it under the income side. Okay, and then for position, please note that now there is 3 columns, no longer just 2. And you have to also name your columns with the right name lah. Okay, so the numbers here, I can actually just extract it from my table above. Okay, so I'm doing 2021, right? So 2021, can you see that we have two assets already? So I'll have to add the cost up. Okay, so it will be the 9,000 plus 45,000. That's why I have this 54,000. Acute D and MBV, same thing. 2021, I will just sum them up together. Acute D is here, add them together. MBV also add them together. If you like, you can also choose to take this minus this, and then you get the 27731. They are the same. So it's a way where you can double check your answers. Can? So the steps will be the same also for 2022. Okay, so let's move on with another question. Okay, so it's also on sale of NCA. Let's run through another one. This one, it will be not so straightforward because my year end is actually 31st March. Okay, it's a March year end. Same thing here, three things going on. I have an existing, I buy, and then I sell. Right? So over here, these are my beginning balance for my existing equipment. So this is 1st April 2023. And then here I say that on March, I actually sold one for 90,000 and the original cost was 105,000. Okay. And then they say that on this date, okay, they purchased something new again, 64,000. Okay, so my depreciation policy, 20% using reducing balance, full year depreciation charge at year of purchase, none in the year of sale. So it's the same. We don't have to prorate our depreciation. Okay, so for here, the three things will be this one. This is the existing one, sold one, okay, and the purchase one. So as of how you want to order how you want to label the order of your asset, that doesn't matter. You just need to know that total you have three lah. So means that you need to do three tables, right? Okay, so let's do for the one that we sold first. Okay, so let's always do the sell one first. Okay, so the one that we sold, what is the first year end? We bought it on 1st June 2021. So what is the first year end? Given that my year end, okay, is on March. It's a March year end. So first year end, when is the next March? 31st March 2022. Okay, so the one that I sell, my first year end will be 31st March 2022. Okay, then the rest, it will be the same. I will just extract the numbers from the question itself. Okay, so original cost is 105, so my cost will be 105. Depreciation 20%, so 20% of 105. First year, so no acute D, so my acute D will be the same as my depreciation. To calculate MBV, I will take cost minus acute depreciation. Okay, so let's repeat this for the next year, right? Because here I know that the question says that we sold it on August 2023, but I don't count depreciation in the year that I sell, right? So I will stop it. I will stop my depreciation at June 2023. So I don't prorate further already. Okay, so I will continue this, March 2023. Okay, cost doesn't change. So acute D, I will take 20% of 84,000. Then acute D, I will add 21,000 and 16,800 together. MBV, cost minus acute D. like that. So this is for the sold. So what is the figure that I'm interested in is this one. What is the acute D as the point, as at the point that I sell? Okay. Okay, then let's do the new one. The new one is also straightforward, right? Because it's just a new equipment and then you just depreciate it as a usual question. So the one that we bought new, 64,000. So I bought it on September 2023. So what is the first year end? Given that our year end is March. So when is the next March after this date? March 2024, right? So here my first year end, it will be March 2024. Cost, I will just take it from the question itself. Then depreciation 20% times 64. Acute D will also be the same. So same thing to find your MBV cost minus acute D. You get this. And then the question, I'm actually interested in 2024 and 2025. So let's continue this until the second year. So this should be what you get for your table. Okay, so it's actually the same thing that we've been doing before. Okay, then now let's do the existing, where it's a little bit more complicated. So the existing is the one here, right? So as at 1st April, these are the figures that we have that is given to us. So we know that at this point, these figures are for 1st April 2023. Okay, and when I sold, I only sold it in August. So again, do you agree that your 90% is sitting inside? Your 90,000, I mean. Okay, let me repeat again. So your 1st April, these are the figures you have, right? Okay, and then I only sold it in August. I only sold it in August. So the one that I sold, it is I'm so sorry. The one that I sold, our cost is this 105,000. So as at 1st April, my 105 sold motor vehicle is still sitting inside here, right? Because if you draw the timeline, this is what we have at the beginning, but we only sold it in August. So this will mean that my 105 here is actually sitting inside my balances in 1st April. So I will need to remove that out. Can? So it's actually the same thing as the previous question. Okay, the one we sold, I have to remove it and minus it from whatever that I have at the beginning balance that they give me. Okay, so I'll take 430 minus 105. And that will give me 32500. Okay, so I can write this down. 430 minus the 105. That's how we get the cost. And then the year end is March 2023, which is the same logic. Last year ending, this year beginning. Okay, so I begin in 1st April 2023. So when was the last day of the last year? Isn't it just the day before? So March 2023. Okay, then from here, my acute D is the same idea lah. Okay, the one that I sold, the acute D is still sitting inside of this 77,000. So again, I will need to remove it. Okay, so when I sold, my acute D is this 37,800. So I will need to remove it from the acute D that is given to me. Because when I sold, okay, I haven't sell yet as at 1st April. So my acute D is still sitting inside of this 77,000. Okay, so for here, I will need to minus out to find acute D. I need to take 77,000 minus my 37,800. And I get this. Okay, then the rest will be the same standard steps that you will do. Okay, so we will do this until 2025 because the question asks until 2025. Okay, so to find your depreciation for 2024 and 2025 is the same thing. I will actually just add them up. This one and this one, I'll add them up. And then for 2025, I'll add this and this up. Okay, so I will just follow according to the table, columns, and rows. So you will realize that with this table, everything is just very neat. And when you answer the question, you will just pluck it out from the table. Okay, so this should be what you get. Okay, so the purple one should be this if you add them up, and the pink one should be this if you add them up. So everything is actually very neat and tidy. Okay, then what is next? I asked to prepare the journal entry for the sale, right? So journal entry for the sale is the same 4 steps again. So when I sell, I will receive money. Okay, so for this case, it's a cash sale, so it will be debit trade receivables, right? So first step, collect money. Second step, I need to remove the NCA that I sold, right? So here I will need to credit it. I will have to credit the NCA that I sold. Okay, so I will always remove the cost price. I will always credit the cost price. Okay, and I know that in my NCA, it also comes along with acute D. So that have to be gone also. So to remove the acute D, you need to DR the acute D. Okay, and as of how I get this figure, it is whatever we calculated from the table here. Okay, the acute D is the 37,800. And then after all of this, I will have to do the balancing one, right? So DR and CR must be the same. So in this case, I know that my debit side is bigger. So to balance this, I will need to credit another 22,800 to make it balance. So again, this is at the CR side, means that this is a gain. This is a gain. Okay, so sale of non-current asset, this is a gain. So it's a gain means it's an income. Okay, so after you do a few more questions, you'll realize that actually the steps that you're doing, the calculation is actually more or less the same. It's not that complicated. Okay. Okay, and then here I am asking for state the amount of gain or loss. I think very straightforward, right? Already given. Okay, so this is a gain of 22,800. Okay, and then the last part, I'm actually asking for the closing. So the closing, it will be the same idea as doing your income expense. So since this is a gain, right, it means that this is an income. So how do I close the income? When I do closing, I will have to put them at the minus side. So income at the minus side, it will be debit. Okay, so I will debit my gain and then credit my income summary because this is income. Okay, income to close, I need to put at the minus side. So I will debit it. Okay, so this is what students usually get very confused at. Okay, students will always ask, why here credit, then why here debit again? So for here, I'm showing that it's an income, and then here closing, I'm closing it. So when I close, I need to put at the minus side. Okay, so that's why it's at the opposite side. Okay, when I close, it's always at the opposite side. Okay, then that's about it for this question. If you still cannot do, then you have to rewind and then rewatch it and rewatch it. Can? Okay. So that's it for sale of NCA. Yeah. Okay, let me check if there's anybody saying anything in the chat. It was sold in MBV is net book value. It was sold in 2017. It shouldn't be inside. Yes, that's why we removed it out. Okay, so let's do a financial statement and then we can call it a day. Okay, so previously I was doing a financial statement that is on that was on company. So this one is also on company, right? This is a service business. The previous time one was a trading business. Okay, so the main difference is just the beginning of your statement of financial performance. Okay, so for here, when you first receive your FS question, the first thing you need to do is to actually what's that called? You have to label your items, right? Okay, so when you're copying over, it will make your life easier. Okay, so let's just label this quickly. Okay, so this one is okay, so for here, consultancy fee revenue. So for those of you who still don't know what is the difference between revenue and income, revenue is your main source of income, but for income, it is just a side thing. Okay, for income, it's just that's not your main business. Okay, so for example, if I'm a marketing firm, marketing revenue will be my main source of revenue. If I open a tuition center, then tuition fee revenue will be my main source of revenue. So revenue is just basically the main source of income lah. Whatever that is income, it will just be a side hustle, something like that. Then, okay, for some reason my pen is not working. Okay, so for here, consultancy fee revenue is a income. For cash at bank, your eyes always have to be sharp and see whether your cash at bank is at which side of the trial balance. So for here is a DR, means it's a regular cash at bank. Okay, it's a current asset. Okay, what if it's sitting at the CR side? What if it's sitting at the credit side? If it's sitting at the credit side, means my cash at bank has a negative balance, means that it is a bank overdraft. Okay, then trade receivable, current asset, allowance, contra asset. Then all these are all under your expenses. All expenses, motor vehicle, F&F, machinery, equipment, all these you should know that it is a non-current asset, right? Acute depreciation, contra A as well. Okay, then this one straightforward, income, trade payable, CL. Then here, discount, never say properly also. So this discount is sitting at the credit side. Sitting at the credit side means that it is an income. So what type of discount is an income? Where you give or where you receive? Where you receive, okay, because you pay lesser, so it's an income. So for here, this is a discount received, which is an income. Okay, then remaining one, bank loan, NCL, shares, share cap, and your retained earning, this one will be your equity. Okay, and then do take note that for bank loan, I cannot write bank loan, I have to write as long-term borrowing. So these are the things that you just have to take note of when you start. Okay, so again, for this one, I would recommend when students who are taking O-level this year, you do financial statement once every week. You do one financial statement every week. Okay, so shall we start to adjust? Okay, so for the first three, it is actually on income expenses. So income expenses, if you're my student, you should know that I always use this, right? O plus P minus. Owing plus, prepaid minus. Okay, so if I'm owing, I never pay enough, I plus. I pay too much, I pay extra, I minus, I take it out. Okay, so for here, rent expense relate to a 16-month period for my year end. So if I see that here they pay 16 months, I will straight away know it's a prepaid. Why? Because 1 year, I only have 12 months. So if I have anything that exceeds 12 months, that will be a prepayment. I pay extra, right? Okay, so for here, how much did I pay extra by? I pay extra by 4 months, right? Okay, because 16 minus 12 is 4. Okay, so my adjustment, I'll create a prepaid rent expense. Okay, prepaid rent expense. And then that will be 4/16 multiplied by my rents, which is the 72,000. Okay, so y'all will go and impress yourself. I will just write the workings, but I won't write the actual figure. Okay, so you're going to try out yourself. Okay, so for here, I will minus prepaid rents, and then here it will be the prepaid rent that I minus. Okay, so it will be this 4/16 times 72,000, and then I will minus it. O plus P minus. Prepaid I minus. And then let's move on. Commission income yet to be received. So what do you call income that you haven't received? Commission income receivable. Okay, so the meaning of receivable means going to receive, but haven't yet received, right? So commission income receivable, 1,500. Then again, this commission income receivable, is it owing or is it pay? Is it prepayment? It's a owing, right? Because you haven't yet received. People are owing you. So O plus. So here I will plus 1,500. Can? Oh, and also remember to label the items that you create on your own. So prepaid is a CA, receivable is also a CA. Okay, third one, utilities did not include for April. So my year end here is April, right? And they say that we didn't include for April, means we didn't pay for April. So what could this be? Utilities expense payable. Okay, I didn't pay for April, so I'm owing, right? So utility expense payable, 570, and this is a CL. So I know that this is a owing because payable, right? So I'll go back to utility expense, and then I will plus because O plus P minus. So I'll plus 570. Okay, so we are done for the first three. So always take note that whenever you are doing your financial statement, under this additional info, for every additional info that you do, you should always have two adjustments. Two. So whenever you don't have two adjustments, you will know that you are wrong. Okay, so for two adjustments, it can mean that I plus here and then I minus here, or I plus or minus somewhere and then I create something new. So regardless what it is, you must always have two sides to your adjustments. Okay, otherwise it won't balance your financial statement. Okay, then let's move on. Over here, someone wrote off. So when you see the word write off, you don't even need to think anymore, right? So write off, what is the double entry? Debit allowance, credit trade receivable. So write off, this person is not paying you, so straight away minus allowance and then minus trade receivable. So don't have to think one. So you know means you know it, right? Okay, so they wrote off 900. So I will just minus from trade receivable and I will minus from allowance. That's it. Okay, and then here they say we need to adjust the allowance. So we are adjusting it to 8% of my trade receivable. Okay, so for here, whenever you see adjusting of allowance, we will draw the arrows, remember? Okay, if you are my student, you will know lah. If you are not, then maybe this will look a bit foreign to you. Okay, so I will start with my beginning allowance. So my beginning allowance, how much did I start at? It will be the one that is listed in the trial balance. Okay, so I started with 3680. Okay, so my beginning allowance is 3680. And I know that I got a write-off, right? So I minus 900. So now what is my current allowance? 3680 minus 900, I should have 2780. Okay, so this is currently what is the allowance that I have. And I know that at the end, okay, the year end, I would want 8% of my trade receivable to be the allowance. So which means that out of the trade receivable that we have, we predict that 8% of them we cannot collect. So let's look at your trade receivable. So right now your trade receivable, you have this 54,500 minus 900, which is 53600. Okay, and then if you take 8% of that, that will be 4288. So my ending will be 4288. Okay, and then here to adjust. So this is all about adjusting allowance, right? So how do I move from a 2780 to a 4288? I will need to plus 1508. So this 1508 will be called your impairment loss on trade receivable. Okay, impairment loss on trade receivable. This is an expense. So your 1508. And since this whole objective is to what? Adjust allowance, right? So to adjust allowance, I want my allowance to adjust it to 4288. So for here, I will go back to my allowance. Okay, I will cancel everything and I want it to be 4288. So that's the whole point. I want to make my allowance to 4288. So at the end of the day, I should always present my ending allowance. Yeah. So far, so good. Okay. Next one, if you know it means you know it. If you don't, then you just need to remember 20% of my loan to be repaid. Okay, so whenever you take out a loan, it's usually a big amount. And if it's a big amount for normal humans like us, we will usually take installments to pay back, right? Because it's a big amount. I'm not gonna one shot pay off everything. So I will pay off portion by portion. So the portion that I'm gonna pay next year, right? That small installment that I'm gonna pay next year, it will be called current portion of long-term borrowing. So I'll create below. Okay, current portion of long-term borrowing, which is a CL. So essentially what I'm doing here is that I'm just taking it out from my long-term borrowing and then I'm putting it under my CL. Okay, if you still recall what is the definition, NCL is whatever I will take more than 12 months to pay, and CL is what I will take within 12 months to pay, right? Okay, so if I were to go and press my calculator, 20% of my loan, okay, so 20% of 100K, it will be 20,000. So essentially, I will just take it out from here. So I minus 20,000 and then I add inside my CL. Basically, that's what it means. Because I'm going to pay it within next year. So I will remove it from my NCL and I put it under CL. That's all. Okay, for the part that I'm going to pay next year. So this one you need to remember lah, the term is called current portion of long-term borrowing. Okay, then as of depreciation, I think it's kind of straightforward, right? Depreciation. So for reducing balance method, this one I will take rates multiply by MBV, right? So here I will take 20% multiply by my MBV. So how to find my MBV? It will be my cost minus my acute D. Okay, so 146,000 minus your 29,280. That's all. Okay, so this one is called your MBV. Net book value. For the one that was asking me just now, what is MBV? MBV is net book value. Okay. So for here, after I calculated and punched in the number, I will create this one, depreciation. Remember your journal, debit depreciation, credit acute depreciation. So depreciation on motor vehicle. Okay. And then this one is an expense. And then whatever the amount is that you press in your calculator, you will add back into your acute D here. Okay, so you will add back to your acute D, your depreciation. And then same for feature splitting. So feature splitting is on cost. So I will just multiply it by my cost price. So 10% times 47700. Okay. Then same thing, I'll create a depreciation on features fitting, and then I will add inside my features fitting here, which I don't think I have to write, right? You all get the idea, right? Okay, it's just the calculation part that is that you need to work on it. Okay, then last one, dividends. So let's recap. What is the formula for equity? What is the formula for equity? Okay, you also forget. So for equity, you will have your retained earnings plus profit minus dividends. That is the formula for equity. Okay, retained earning plus profit minus dividends. So for here, I know that at the end of the day, this one, it will give me a ending retained earning. So I will have to minus it from my retained earning one, agree? Okay, so whenever I have dividends, I will need to deduct it off from my retained earning. So if you can understand this logic, whatever that we are going to do, it will make sense to you. Otherwise, you will find it very confusing. Okay, so for here, we declare dividend 10 cents per share. So we got how many shares right now? How many shares we have right now? Is in the trial balance. 50,000 shares. Okay, so I get it from here, 50,000 shares. So one share, I give 10 cents. 50,000 shares, total is how much? Total will be 5,000 lah. Okay, so here when I declare dividends, but I paid not now, I pay in future. So it will be debit dividends, credit dividends, payable. Okay, so for here, I already know that dividends, I will need to deduct it off from my retained earning account. So here, I will straight away just deduct 5K already. And then I will create below, I will create a dividend payable, 5,000. This is a CL. Okay, so once again, there's always two adjustments to every additional info. Okay, so this one minus 5,000 is one, then I create a dividend payable, that is another one. So total, I must always have two adjustments. What is EA? Oh, okay, so those not my student one, we can run through the trade receivable. So for me, I usually use this method lah. So CA stands for current allowance, which is what allowance I have right now. Then EA stands for ending allowance. So what is the allowance that I want to have at my year end? Okay, I hope that answers your questions. So this is the term that I usually use lah. So if you are my student, you will keep hearing all these terms lah. Okay, so this current allowance and then ending allowance. Okay, current, ending. So after you have labeled all your items and after you have done all your adjustments, now is the time for you to do your FS, your financial statement. So I also like to call it FS for short. Okay, so for this, it will appear in your paper 2. It is 20 marks. So in paper 2, you have 2 hours to complete that paper. And ideally, your financial statement, you should complete it within 45 minutes. And if you don't, then you should move on to the next question. Okay, this is some exam tips that you should be aware of. Okay, so within 45 minutes, you cannot finish or it doesn't balance, then just please move on with life. Okay, so even though if your financial statement doesn't balance, it doesn't mean that you will get 0. You will still get some kind of marks. Okay, so back in my day when I was taking O-level, my financial statement also didn't balance. Okay, but the result come out, it was still a distinction. So doesn't matter. Okay, doesn't balance, move on. Okay, so let's look at the statement of financial performance. I mean, of course, we don't have time to like sit here and write like one line by one line lah. So I will just show the answers once and for all. Okay, that one shot just show. Okay, so as I was mentioning earlier, this is a service business. So it's a service business. I will just show it on the first line like that. So there's no sales revenue, there's no gross profit, there's no cost of sales. Okay, it will just be one line like that. And then since it's only one item, that's why I'll put it at the right hand side. Okay, here. And then the following format will still be the same. It will be add other income and then less other expense. As of the format, two columns, it is also the same idea that I've explained before. Left hand side is for me to list out the items, and then right hand side, I will total up. Then same for here. Here, I list out all the expenses. Then here, I will add them together at the right hand side. So later when I'm calculating, it will be very straightforward and easy. Because I can just take this amount, I plus this, and then I minus this, and I get my profit. Very straightforward. Okay, so plus this, minus this. Then as of people ask me why plus, why minus, okay, open your eyes and see, because here says add, here says less. Okay, add you plus, less you minus. And it's very straightforward. Then another tip is that for every line that you write, when you look back at your question paper, you tick all the items. Okay, you tick all the items. You tick. So all the expense done, right? Then you tick like that. So at the end of the day, when you do your question, all your items should be already ticked. Okay, so I'm just going to leave this here for maybe 30 seconds. Okay, so this is for performance. So let's recap one more time. So for statement of financial performance, what are you looking for? What exactly are you calculating in this statement? This one, right? My profit. So how to find profit? How to find profit? Income minus expense. So you'll realize that all the items in your statement of financial performance, they are all income and they are all expenses. Okay, you wouldn't find anything else aside from these two items. It will all be income and expense. And we know that when you add income and expense together, you will get profit. 10. Okay, and let's move on to the second one, which is statement of financial position. So statement of financial position, you will now have 3 columns, which I believe those who are taking O-level in 2 months' time, you should know this by now, you should be familiar. Okay, then recap again, statement of financial position. It will be your A equals to L plus E. So all your items here will be your asset, your liability, and equity. And then your teacher will always say, right, must balance, must balance. So why must balance? Because A equals to L plus E. Okay. And then as of here, I think kind of straightforward, nothing much to explain also. So everything here, I will add at the center column, and then I will total it at the right hand side. So for my non-current asset part, I will only add the NCA together. And for trade receivable, I will only show my net trade receivable. Okay, so for those who still unsure about this chapter, go and look at my lesson on trade receivable. I did a lesson on trade receivable as well. So when you show trade receivable, you must show your allowance also. These two are best friends. Okay, so I'm interested in the net trade receivable. Okay, so basically what this means is that my trade receivable total, okay, customers are owing me 53,650. Okay, but out of this 53,650, I am expecting that 4,292 I may not be able to collect. So what am I expecting to collect? This 49358. Basically, that's what it means. Okay, so again, the format is the same rationale. I will list everything here and then I'll total up over here. Then my last column, it will be total A. So how to find total A? I add this and this together, I will get 29874. Okay, straightforward. And then remember to double line. And always start with non-current first and current. So I think this is very straightforward at this point. Okay, unless you are set 3. Okay, but I think if you are set 4, this should be something that you should be very, very familiar with already. Okay, and then the second portion will be your L and E. Okay, so we will start with E first. And as for here, take note that it will be a shareholders equity because this is a company. But if it's not a company, then it will be a owner's equity. Okay, so take note of that. So shareholders equity, you have these two lines. Your share cap and your retained earning. So retained earning, look at this formula. This is whatever I was going through with you just now. Okay, so your retained earning plus profit minus drawings. Okay, retained earning plus profit minus drawing. So where I get this 32454 from, it is from here. My profit. Okay, add the profit. So you have to go to your previous page and then find the profit and then you add it in here. Okay, and this 5,000 is the dividend that we calculated previously lah. Okay, the 10 cent times 50,000 shares. Okay. Okay, so basically same thing, these two added up, I will have a total of 154,154. Okay, and then for non-current liability, you only have one item lah, which is your bank loan. And then again, can you write loan? You cannot, you have to write long-term borrowing. So whatever that they write, right, they can write whatever loans they want. So as long as you see the word loans, okay, LOAN, you just have to write it as long-term borrowing. Okay, that's just the format. I have no answer of why. It's just a format that Cambridge wants to see. Yeah. Okay. Then your loan, it will be the 80,000. So it is the 100K minus the 20K that gets you the 80,000. So this is what I'm going to take more than 12 months to pay. That's about it. Okay. Then current liability, the same thing lah. Whatever that we created, we will all put it under my CL. Okay. And then list out on the left hand side, right hand side, I will total it. And then as of total, how do I find my total L and E? These three, I will add it up together. Then I will get here. Okay, so this is why we always have two columns. So your right hand side is your total. So when I calculate the final line, I will just look at the right hand side column, which makes life easier for me. Okay, so these three add together, I get my total E and L. And you notice that these two balance are the same because A equals to L plus E. So I'm gonna leave this here, and those of you who have questions, you can unmute and ask, or you can type in the chat if you're a bit shy. Yeah, pretty much that is all. Okay, then after I leave this here for 30 seconds, we will run through again a recap of what we did today, and then we will call it a day. Okay, so I guess that's about it, right? I think only Amiyas is here. I'm sorry if I didn't pronounce your name correctly. Okay, so let's run through a quick recap of what we have done today, and then I think we can call it a day lah. Okay, so NCA, a lot of students always complain and say that it's very complicated, very difficult, but actually it's not. Okay, so you just follow these 4 steps. Okay, I sell, receive money, debit cash at bank or trade receivable. I sell NCA, so credit NCA, right? So with the NCA, I also know that it comes with acute D. So that has to go as well. So to get rid of acute D, I need to DR the acute D, right? Okay, and then when I DR the acute D, these 3 add together, it will give me the difference between the money I receive and the MBV of my asset. Okay, MBV, net book value. Okay, so to find the difference, this difference will tell me whether I'm making money or I'm losing money, gain or loss. So if it's gain, credit side, loss, DR side. Then of course, if you are doing the closing, you will put them at the opposite side. So it's just like what you learn for chapter 6 and 7. Okay, so if it's a gain, I close, I need to debit it. Then if it's a loss, I want to close it, I need to put at the credit side. Okay, I hope you understand what I'm saying. If you don't, go and look at my lesson for chapter 6 and 7. Yeah. Okay, so that is for sale NCA. And then when you have 3 things happening at once, like the question that we did. Okay, this one we sell and then got new and then got existing, right? For the sold one, you always want to do the one that you sold first. Okay, calculate the acute D and then you deduct it away from the existing. Okay, so the cost and the acute D, you need to deduct it away from the existing one, from the one you sold. Okay, so basically the so-called complicated part, it will just be this part, like the minusing part. Like that. Aside from that, everything will still be the same, just like your typical depreciation question. So any question? Else we can call it a day. No questions. Any question? Open floor question. No question. Okay, then I guess we can call it a day.